There have been several instances over the past year where we've talked about the possibility of it being block deal season. And every month you've been surprised that there are still more to talk about, in fact, and large deals at that. Yesterday, Aster DM Healthcare, 10% stake being sold in two deals or in two separate transactions. So the reason we're talking about this is perhaps to give you a sense as to why these deals are taking place with such frenetic intensity and what does that indicate, because there is promoter selling as well. So Niraj, is it only primarily a factor of the run-up that you've seen across the board? Valuations seem to be ripe to take some money off the table?
So if the Whirlpool management is to be believed, most certainly.
Right.
But the other aspect also, and we'll get to that, but the other aspect, Alex, to be very honest, is also that now people are unfazed by the fact that, oh, there is a promoter entity selling.
Right.
And therefore, this is a top.
It's not a bad word.
It's no longer taboo, yes,
yeah.
You're right. But here's some data. So we're calling it the year of block deals again. Why? Because FY24, and these numbers are a bit fuzzy, they could be a bit here and there because we still have not accounted for the two block deals yesterday, the one happening today as well, Cloverdale selling in IDFC First Bank. But FY24 block deals, over $21 billion safely. Now, why do we call it again? Because FY23 had seen block deals of over 23 billion as well.
Right.
And by the way, just to put this into perspective, calendar year 23, Jan to December, we don't look at it that way, but Jan to December was circa $26 billion. So,
which is even more, yeah.
Yes, FI flows have been there, but yes, the block deals have been incessant, continuous, and large at that.
And we've seen a substantial amount of trades that took place in the last month of the calendar year, which kind of skews the figure. Of course, we've still seen significant in February and in March as well. When we get the whole data, perhaps that'll eclipse all of that.
Very likely that March will eclipse December. Yeah. Very likely so. But yeah, December was strong, 53,000. Jan was a bit of a dip, but Feb was 41,200 crores. So in some sense, the block deals that are happening are very, very large and very, very frequent, which brings the actual number to be so large.
And it's not just the small companies that are seeing this. There are, in fact, you've listed out several frontline companies that have seen very large trades.
Yeah. So shameless plug out here. If you want to know about the smaller ones, there's a beautiful story that our colleague Chinmay has done. It's there on our website. But here's the larger ones that have happened in March. So ITC, arguably the biggest one, right? 17,485 crores or thereabouts. So that was one large. TCS, 9,300 crores. Interglobe Aviation, 6,800 crores. And Interglobe has been a consistent feature now, you know, the stakes that we've seen by the Gangwal family. Yeah. Airtel, 5,800 crores. Motherson, 3,600 crores. Of all things, Zomato, 2,800 crores. But again, the deal route here, right? Alex, an overhang on Zomato for such a long time. We saw the trades happening between 155, 160. I think the price was 159. From there, the stock is at 188. Sure. And again, just amplifying the point that I was trying to make, that selling of these shares is no longer being considered taboo because the stocks are actually recovering after that as well. So much as for the last 9 months, we've been hearing this, that, oh, promoter selling is an indication that this is a peak. Yeah. At some point of time, yes, we will hit a peak for sure. That's a natural market cycle. But clearly this shows that promoter selling is not necessarily signifying a peak. I may be a minority. Some people might smirk and laugh at this. But guys, for 9 months, we haven't hit a peak, right?
But okay, so that's an interesting point, and that's more of a short-term implication, right? But I'm thinking also from the long-term perspective. Of course, okay, these managements, or not managements, the promoters are taking money off the table. And I think what you said is so insightful and important to address, because even 20 years back, Niraj, you're talking about if promoter goes below 50%, that means that they're not interested in the business, or they sold 5% stake.
And I say, look globally, guys. Yeah. Look globally. A lot of global businesses are not promoter driven. Yes, India is an exception. And again, I'm nowhere saying that promoter interest going down is okay or it's very good or whatever it is.
Yeah, but it's not a bad thing.
Yeah, maybe in some cases it might be okay. Some PE firms are running firms much better than what promoter entities did per se. So that's one. Of course, we've had PE exits too, by the way, but that notwithstanding. Now, potential reasons, good valuations, one. But I think deeper markets, you have to admit that
more buyers
are very
and institutional buyers.
Yes, and it's not causing the damage on the tape. We've seen that normal FI outflows as well as these block deals are not causing the damage on the tape that they otherwise might have a few years back in Indian markets.
A lot of domestic mutual funds picking up large quantities of stake.
Yes, and there are ready takers for promoter stakes. That's the other beautiful thing, right? I mean, look at the promoter exits, Alex, from Indian stocks. Whirlpool, and that was the big talking point, right? Because the guy saying, the company saying that, oh, we are exiting because we think the valuations are much higher than what's happened, etc. We get a good arbitrage, etc. and all of that. Yeah, sure, but we've seen promoter exits in Pfaudler Inc., exiting GMM Pfaudler, Timken making a large, this thing from Timken India, Fairbridge Capital in Thomas Cook, Clear Wealth in Gokaldas Exports. It's not that all the stocks have corrected.
Yeah.
So again, I repeat, I am a minority. A lot of ancient wisdom would suggest that it's a matter of time before you start seeing the troughs coming in. And sure, that could happen. The only question that I ask is, could that be a part of a normal market cycle? That after every run-up, there is a peak and there is a trough. Does this mean that this is the big, again, there's a lot of talk around how US markets have seen some significant promoter exits or promoter selling in the last 1 quarter. It's not that the US markets are peaking. At some point of time, they will.
Highs, yeah. Yesterday they hit all-time highs.
Who's to time it? Like,
so, okay, one last aspect that I want to delve into, which is the pricing of several of these block trades that we've seen. And look, of course, I don't have all of the data in front of me. Perhaps the story that I will also shamelessly plug on the website, NDTV Profit, has more details on the pricing. But 6-7% is normal as a discount to the previous close. And I think you were having a conversation yesterday about this, about the pricing. Why is it not tighter? Is there anything to take from that?
One, a semi-determined formula determining the floor price, and then depending on the demand that the investment banker is gauging, you set it at a small discount or otherwise. Clearly, we know that these discussions are not easy, depending on the book getting built and depending on those factors, essentially, the eventual pricing coming out. So again, it's up to the investors, right, to see that if the discount on the stock to the floor price is significantly higher, you can kind of know that the demand was probably not as strong as otherwise believed, and therefore think about it. Zomato was hardly any discount, and then you know what's happened to Zomato post that as well, right? From 160 to 190. I'm not saying this is it, and that will keep on going higher. But we've seen this uptick, so that's okay.
And also from the perspective of this large seller, you know, a stock that has gone up 80% or 50%, 6% is not that material from that perspective, if you think about it. Okay, so we've hopefully given you a bit of perspective on these large trades that are taking place. In fact, you should watch out for the start today as well. Don't be surprised if you see a few more, and we'll get you more details on that as well over the course of the day. For now, we're slipping into a very quick break. On the other side, you've got the major F&O cues. Remember, end of the financial year, last trading session, and also the monthly expiry for options. So lots to talk about. Do stay tuned.